Quick hits, part of the show where I talk about three things that I've seen in the news lately. I make a quick comment on each. I'm sure some of you have seen these, and I find them quite interesting. First one, oil prices falling. Oil prices have been hovering in that mid 60 range, WTI, which is Western Texas. This is the US dollar figure for oil. And West Texas Intermediate actually is what WTI stands for. And we've seen it, as I said, 60 to 65. I think you're going to see that fall further as OPEC continues to increase production. The OPEC nations, led by Saudi Arabia, continue to increase production. Iran, Iraq, and they're up to about 527,000 barrels per day. Number two, Citibank, that is, raises gold forecast to 3,500 per ounce in 3 months on negative U.S. outlook. So as things become more negative with respect to the economy, perhaps that means a weaker U.S. dollar and good for gold. Stagflation fears are back. We touched on that at the top of the show. Stagflation, slowing growth, but higher prices, something that central banks very hard to combat. So let's get to our first one, falling oil prices. And of course, we're going to show the price of oil. We have a chart on the price of oil. You're going to see the ups and downs. You had a big spike. It looks like, let's call it mid-June. Again, a lot of things can cause oil to spike. War in the Middle East causes oil to spike. The OPEC nations, OPEC meetings, depending on what they say, how much their production will be, causes oil to fall or spike higher. Right now, you can see oil has been pretty steady in and around, as I said, $65. But I look forward to that. I look for that actually falling below $60 a barrel. I think that's what President Trump wants. And as we know, the president will do whatever it takes to get that price of oil lower to again help bring down inflation that his other policies may be causing. Our second topic for our quick hits is Citibank causing oil, or at least predicting gold, I should say, to rise to 3,500 in the coming months. Again, they believe that the U.S. economy, the turmoil in the U.S. economy, the slowing growth in the U.S. economy, whether it's manufacturing or just slowing growth in general, will continue. And that should bring, I guess, the U.S. dollar down versus the basket of other major currencies. And if that is the case, the benefactor will be gold. And the Citigroup believes that the price of gold will spike or move higher to about $3,500 an ounce or even greater than that. Our third topic is one of stagflation. And this one's tough to show an example of. So we pretty much have a definition which we can put up, which, as I've said many times already on the show, an economic cycle characterized by slower growth, higher unemployment rate, and higher inflation. And I guess the problem or the issue with this is, what do you do with stagflation if you're a central bank? Do you raise interest rates? Well, you can't because the growth is slowing down. Do you cut interest rates? Well, you can't really do that either because that could spur on more inflation. So what do you do? Well, central banks will tell you it is very difficult and something that they just will probably tell you they don't know how to address. So stagflation, that is something that we're all keeping an eye on as we move forward with these tariffs. And I guess we could say the current trade war between the United States and all other countries around the world.